Hey, John.
Hey, how are you?
How you doing, buddy?
Good.
So, it was nice talking to you on Twitter Spaces to try and make people aware that you were going to be interviewed here on Face. So,
There you go.
welcome here.
Hey
Really
guys.
appreciate your time.
Good. Nice to meet
And
everybody.
yeah, John is a mentor and he runs a uh, trading room and he's a writer and he's a doctor in economics, basically in leadership. So, in leadership, I'm going to let you take over the interview
Hey, thanks, Dale.
since
I
you're
really
the
appreciate
leader.
it. I'm gonna pull up some charts here if that's okay with
Okay.
everybody.
All right,
So
buddy.
let me
What
share
do you
my.
think of, first of all, John, what did you think of yesterday's action?
I thought it was great. Finally, right?
Yeah,
We've been in this range, for a long time, and we're still in this range, right?
yeah,
So one of the things I have pulled up here, guys, is the I've got the quarterly chart pulled up here. I've got the 3-month chart pulled up, and
nice.
we've had a pretty decent down move since the all-time highs.
Right.
So when I look at the quarterly chart, one of the things I look at is to see if we have 3 red quarters in a row, that
Yeah.
gets concerning. Right. And so what I found is that we tend not to start back to the upside until we can confirm above the last red candle. Right. And so we've been kind of testing, we've been getting close there. But again, that level here, the high here is about 431.73 on SPY. And so it's important for us to get above there. So in the meantime, we've basically been in that quarterly range over the last couple quarters, right? And as we move down to the monthly chart, you can really get a bigger picture of it here. Just a
Yeah,
nice.
wasn't April such a great risk on month, highly publicized best month of the year? Well,
Oh
lower
yeah.
on the month, lower on the month.
Yeah,
Huh?
right. I mean, it's literally been like one of the choppiest months that we've seen ever, and it's been super duper risky, right? And so, but one of the big things I liked about yesterday is that we pushed below these candles. And so like, what really cool stuff, there was some nice alignment here. So one of the things that we like to look at is levels. And then once we can figure out where we're at with the levels, then we can look for setups in there, and at least on a day trading side and sometimes on a swing trading side can look for movements there. So when you look at the monthly, we were green, we were above the March level for kind of chopping above there for a while. But yesterday there was this huge alignment here that corresponded not only with the monthly highs, but also with the weekly lows. Last week's doji week, last week was
Yeah.
the narrowest range week in over a year, since
Yeah, it was like
November of 20.
it felt like we were in the eye of the hurricane last week.
Oh yeah, I mean, it felt like it was like, it felt like it was. And here, and if you go back to November of 2021, we're talking about Thanksgiving holiday. So I mean, it was like there was just nothing happening, and there was no movement. So so price is just waiting to break out of this range one way or another. Now, I'm
Right.
talking to a lot of people who are like, oh, this thing's going to all-time highs, this thing's going back. But yesterday kind of gave us a reminder that maybe there's going to be a little bit of pain before it starts doing that again,
Yeah,
right?
like take out the October lows.
Right, exactly. And so so what we saw here is this was really rough too. At the end of
Yeah.
last week, we had this double doji, and then we finished Monday
Yeah,
with
they
another
trapped
one, right?
everyone.
Exactly. And then finally we gapped down and we lost those. Now look at this level right here, this line. That
Yeah.
corresponded with the monthly high, the weekly low, and then this last 3-day range that we've been contending with, that just getting chopped up in this range. And so finally yesterday, now yesterday, I'm going to pull up the intraday, and because that's what we like.
Aren't you grateful that the market has memory and doesn't get Alzheimer's?
Right.
So we could look left and have evidence and important critical areas to pay attention to.
Yes. Yeah. And so that's the key thing. And so it just requires a lot of patience, in this.
You're getting a comment that someone likes your spaceship there, Dr.
Oh,
John.
thank you. Yeah, I do get a lot of good information. Thank you so much.
Ground control to Dr. John.
That's right.
All right.
So yesterday was interesting, right? So we before we got through these levels, right? So here's that level here on the intraday. Before we got to these levels, I mean, we started off the day with another choppy open. right? But one of the things that we like to do at the open, and everybody's got their own opinion of Elliott wave theory, but sometimes it works, right? And so I only like to use it when it works. So it always seems to work after the fact, right? Whenever you're looking at a chart, wait a minute, was that an ABC or a 1, 2, 3, 4, 5? And if you look at some of the macro theories out there, we could take a look at that on the bigger charts to see where this thing could be going. A lot of times there's a bull count, a lot of times there's a bear count.
Yeah, there's always alternates.
Right. And so, and then, it's funny, and unless there's like no exceptions to the rule, and I've seen one before where it's like, there's no other possible count that this could be, and it still did the opposite. Right. So it's like, you have to take it with a grain of salt, but it gives you a framework, into price action, right? Into, how things move, right? A little bit of psychology in it, what's going on here. And so we can kind of talk through and reason through that. And then if we get proficient enough at it, then we can really manage our risk and look for a bigger reward, right? So I'm just gonna talk about it a little bit. So an Elliott wave, right? We like impulsive waves, right? We want to catch those big moves, right? We don't like getting chopped up. In those choppy days, what we found is that for the most part, you get some whipsaw action, but for the most part at the open, we've been seeing a lot of choppy action. We started seeing that yesterday. So yesterday seemed like it was going to be a ho-hum day. No, more chop. Let's wait till GDP comes out this week. Let's wait till the Fed comes out soon again. It's so funny now, like everybody's like, when's the Fed coming back out? We need some action here. And it's like, no, you don't want to encourage this stuff.
Don't you think, let me ask you this, John, it's kind of a theoretical question. Don't you feel that a market, when it makes a big move one way or the other, without a news story being the catalyst, makes it even more significant?
I do. I mean, I just find it to be more enjoyable. Like, so it's like, you're not, jumping on some headline and hoping to, catch a piece of the move. When you just see pure price action happening, it just gives you like delectable trading opportunities, right? So, so I like that. And I do think they are interesting. One of the things we do, and I know I said do, but like one of the things that we do is we look for significant news candlesticks, right, on the daily chart. And sometimes that can give us a frame of reference for a news event, let's say like a Fed day candle. Like we want to look at that and be like, okay, well, that has positioned itself with something, right? Some sentiment. And then we can kind of work around that, with levels. But when like you said, when we get a day like yesterday where there's really no news headlines, I think it does show that there's a lot of market participants out there that were getting out. Right. And then because of whatever reason. Right. And it doesn't matter. The point is that they were selling. And like you said, now you can go back and you can reference that level. So before we get back into the intraday.
So what do you tell somebody who says to you, John, I was waiting for May to sell, if selling May go away, what do I do now? I didn't lighten up. I didn't get short. What do I do now?
It's so hard. It's so hard to look at it that way. I really don't trade on, I just look at the charts, right? I just look to see what it's saying. And so, it's hard for me to say like,
okay. So the point is, people think they're probably late on this move because they didn't get short yesterday when it could just be the beginning of this.
Right. And then, but at the same time, we're still just chopping around in last month's range. We just got in last month's range, so it's
all right. I know that's my self-talk I used to hear. Go ahead.
One of the things that we do look at is we do pay a lot of attention to option activity, right? So because the market makers are heavily involved in that, and they can push things around. So one of the things that was significant is that Friday was actually an OPEX day, right? And so what we do is we look at the next candle and kind of see how things set up off of that. So Monday was what we call the post OPEX candle. And then, so what happens is after OPEX, all that gamma, all those options, all that open interest comes off the board. It gets cleared away. So everybody's like deep sentiment or whatever, they either blew up or they succeeded through it. It's all gone, right? So it's a reset. And that started 2 days ago, right? That started Monday. So here's your reset day right here. So again, it was another doji. So are we going to go calls? Or are we going to go puts? Right. And so yesterday, since we closed below it without a gap, is one thing that we look at. Since we closed below it pretty strongly without a gap, that sets some brand new sentiment out there. And now we're really going to track and see if those put buyers are going to be able to push things. Now, where are they going to push it? who knows? We got some open gaps below right here. And like I said, we've got the bottom of this consolidation range. That's a definite area of interest. But like we said, we're back. We're basically just back retesting last month's range, right? So until we can break out below there and through these levels, right, the bears are not necessarily in control. They're just pushing and testing, and so I wouldn't say that anybody really missed anything unless you were day trading yesterday and you missed some good short opportunities throughout the day. That's for me. And then I like to see how things hold, and I like to see how these things, go levels. Usually nothing goes in a straight line. So we like to see
yesterday at a minimum change your bias that you'll be looking to sell rips rather than buy dips?
At this point, it's interesting. Futures are green right now, so that could imply that we're gonna see a rip selling opportunity here today. Again, I want to keep an eye on these levels. If we can get below, if we stay below 50% of yesterday's range, then look at that. If we start pushing above that, the bulls might be coming back. I mean, we've seen it so much over the last couple of months that you have a huge green day. It's like, yeah, everything's gonna break out, and then or huge, then you're completely reverses with the bearish engulfing candle, then it completely reverses with the bullish engulfing candle. And that's exactly what happens when we're range bound like we are. So at this point now, it's it's a lot of tactical, you got to get tactical, right? So as one of my old mentors.
You guys trade anything else besides SPOOs?
We're mostly focusing on 0 DTE options on SPY.
Can you explain that? Can you explain 0 DTE to our
community? So 0 days to expiration, and that's a brand new thing, pretty brand new. Only like within the last year or so, where they started taking SPX, right, which is your cash S&P index, right, and then you've got your SPY, which is your ETFs based on the SPX. So you got SPY, you got Qs based on the Nasdaq. And you got your RTY, you've got your IWM, right? And so with those now, by 0 DTE, that means 0 days to expiration. That means every day now, Monday through Friday, is an expiration day on options, right? And so when we have a 0 DTE day, when options are expiring that day, options are made up of just a few components, right? They're made up of the intrinsic value, right, which is based on the price of the stock or the underlying ticker, right? And it's also based on the volatility, which includes time decay, right? And so the one thing about options is that's obviously different than holding shares or holding shares short or whatever the case is that those can expire, they decay in value, the premium goes down. And so as you get closer to expiration. And so, but the advantage is if you're a day trader, okay, let me rephrase it. The advantage can be, if you're a day trader, is that that theta
no premium,
that all that theta is basically almost out of the equation, and now you're dealing with pure volatility and pure price action and pure movement. So if you can get a fast move on the options, the delta, which is the Greek that says that per dollar move, this is how much the option should move based on whatever the current pricing is, tends to explode. It tends to accelerate. And so you can get a lot bigger moves on those if you're trading it right and you're managing your risk. Now, the reason I say that everybody, right, it's an advantage. Well, it can also be a disadvantage. And it's shown, like, apparently statistically, there was just a report that came out that retail traders, since they came out with 0 DTE, are down, are like significantly, like in their accounts. Like I think it was like a broker like interview, like statistical interview, and they literally showed that since 0 DTE came out, that retail traders are losing money, right? And I think it's because they're excited about it. It's 0 DTE. We can really get in and out every day now, and they're just taking hits because they're not seeing the setups as clearly.
They're buying bulges and they're selling declines.
Right.
They get emotional. They get FOMO with it. Oh, it's going up, I better get long. Oh, it's going down, I better get short.
Exactly. And that's exactly the opposite of what we're doing, in our live streams in the morning. So for instance,
what is that, John, called ODE?
It's 0 DTE. 0 DTE. So days to expiration. So normally it used to be only on Friday. Like, so right now, most stocks, right? So stock tickers like Apple, Amazon, things like that, their weekly options expire on Friday. So that means Friday is going to be a big day. for that. Friday is typically a big day for trading those. I prefer trading on those days because you don't have that lag. So if you catch a good setup, you can really get that explosive action on the moves, but you have to be able to manage your risk on those a lot better. Yeah. Whereas the other ones, you can just get you can just kind of get chopped up just waiting for something to move. The premiums are higher, they're more expensive, so you're not getting, your risk reward gets a little bit skewed on those. But on these 0 DTE days, like, they've been great. So I like trade. I mean, you can trade shares with SPY. You don't have to trade options on it. I just enjoy it. And I also enjoy trading futures on it. So I like trading the S&P futures on the NASDAQ, on the NQ, and the ES, right? So I'll do that, and I'll trade options too. And then I'll focus more on stock options on Friday, unless there's like some amazing setup like intraday or something like that. So, but now that we have 0 DTE every day, if you can manage it correctly and you can manage your risk reward, and I'll show you in a second one of the things that we like to look at on that. Like you said, we don't want to buy those breakouts, because once it pulls back, once it gives you that pullback, it's going to cut your premium in half. You're going to lose half of every. So, and we talk about that every morning. It's like, guys, be careful buying breakouts this morning. It's Friday. Yeah. Be careful at 0 DTE day, because if you buy this breakout and it just pulls back a little bit, if you top ticket, it's going to crush your position, right? And so,
do people try volatility spreads in there where they'll get long a put and a call, and one will compensate for the other one?
You can. It's a lot, you know, they're pretty clever with how they price those things, you know, so it's like they kind of know what's going to happen. So we like to do that on Fed days, right? So on when it hits that 2 p.m., 2:30 before, you know, Eastern time, before Jay Powell talks or before the rate decision comes out, we wait for things to calm down a little bit. And then a lot of times we'll look at a straddle where we'll buy both the call and the put. And let's just see if this thing rips or you know, or flushes one way or the other. And then you can, because you're like, I don't know, you know, because there's so many theories on Fed day. It's like, okay, well, you always short it when it rips first, and then when it rips all day, everybody just gets destroyed, you know. So, but if you can get a straddle with some good pricing on that, if it does move, and sometimes we do see a lot of those big moves, you can get like a double, a 10x trade on those straddles, which is pretty amazing. We've seen that on a lot of Fed days. Not last Fed day, unfortunately, but we see
maybe next week.
Maybe hopefully next week. Yeah, exactly.
Okay.
So to show you what we were looking at yesterday, just to kind of dig in here a little bit, we you know, we thought that the chop was going to continue. Now this line right here, this purple line, is that monthly high. It's also corresponding with the weekly low, and it's also corresponding with those doji lows on the daily. So obviously, if we can get below this level, you know, we're seeing that the bears are in charge there. Until then, we're not really too sure. So we started out with a choppy open yesterday, and I'm just going to show you real quick one of the things that we like to do. So, you know, if we do just like, you know, like I said, Elliott wave, you know, I was like, if we're chopping at the open, I'm assuming I don't look at anything before it. I don't look at the macro count. I'm not like, oh, we're in an impulsive wave one on the daily, so we need to go. No, like the open, you know, between 9:30 and 10:30 is where you get your moves. Everything else after that is whatever, right? So this is where the action happens here, right? So, but for the last couple of days and the last couple of weeks, we haven't seen, you know, some really amazing action. But yesterday I was like, okay, we started chopping, you know, we're kind of like, oh, like, whatever, we're just chopping, same old. And I was like, okay, this is an ABC here. You know, let's see what happens. And so what we do at that point is we look for an impulsive move, right? And so once we get an impulsive move, then we can assume that's, if we're just finishing up an ABC, we can assume that it's either a wave one, you know, or a 3 type thing. And so what we did yesterday is we didn't think that we thought we were going to chop all day. But when we saw this candle happen here, we're like, let's get short. Right. So because we're like, all right, here's an ABC, and this could have been, and you know, basically it kind of proved itself out. This could have been a little bit of a, you know, kind of a 1, 2, and we want to see a candlestick confirmation. We're not just guessing. We're like, oh, this might be the end of the wave. You might miss a piece of the move, but you're still going to catch a nice run on that. So here, what we're seeing here is we see this candle right here, big bearish candle. Let's get short right when we break below that candle. And that just happened. And I was like, I was just trying to short to the low of the day yesterday.
Yeah.
I didn't think this thing was going to go down like it did. And so ultimately we got to the low of the day, but we blew through it. And I was like, oh man, that's an awesome trade. Great job. And then so we're just then it started chopping again. Right. And we're like, okay, maybe that was wave 1, right? Maybe, or wave 3 or whatever. Maybe it was. And so let's see what the next, so we wait. for what we like I said, we like waves C, waves 3, and waves 5, right? Because it's hard to capture waves.
Tell us why you like C and B. I'll tell you why I do after you tell me.
Okay, because they tend to be impulsive, right? So so basically Elliott wave 1, 2, 3, 4, 5.
They also can be fib extensions of A or 1, which means it's a bigger money. It's more potential as a money wave.
Yeah, and it doesn't mean I know exactly what wave it is, but if we assume, so yesterday we were assuming that we didn't know what this is going to do. So I was like, all right, this could be an A, this could be a B. Let's see if wave C goes. So wave C is usually impulsive, right? So they've got like 3, 3, 5. Anyway, it ends with a 5 wave. So you're going to expect a wave C to be a 1, 2, 3, 4, 5. So when we saw this, we're like, okay, A, B, and then boom, impulsive wave up right here. I was like, oh man, that could be the wave C that we're looking for to get the next wave down. And then what happened is it worked really nicely. So that was basically your wave 4, and then boom, you got this right here, right? Yeah. And then that finished your wave down and just turned into a nice open. So, we do the bulk of our work in the first 30 minutes of the trading day. And then what happened yesterday was rare, because normally between 11 and 2 o'clock, it's some sort of goofy Elliott wave WXY for, why waste your time? Why waste your brain power on that, right? So just trade impulsive waves, because you're going to make money, right? So waves 3, the reason why 1 is rare, because it's hard to predict wave 1. Sometimes you catch
your top or bottom picking.
Exactly. And so the thing with wave C is that it's typically impulsive. And then, like you said, if we're wrong, well, maybe it's just a bigger wave, and then you take advantage of that. We actually had that the other day. We're like, I think this is a wave C down. Let's go ahead and take, and then it turned into like this huge impulsive drop, So what was really cool is this, right? So that was a fun day. But what I want to show you is the Fibonacci's, right? So initially here, wave 2, right? However you want to look at this, tends to be a 618. And, however you want to label this one, we were actually doing it kind of like this. We're like, hey, this is wave 1 here. ABC wave 2, and look at that, right to the 618 extension, right? Or retracement, right to the 618 retracement. So once we saw this candle, the red reversal candle, we can get short off of that, and then we can ride this next wave down, and then you've got kind of your A, B, C wave 4 triangle, then your wave 5 finish down there. And so, but we always look for candlestick confirmation, right? And so, because that's the only way. It's the only way. Otherwise, you're just kind of really guessing. But if the price action confirms your thesis, then you're good. Because what do you do?
What's your look ahead for today now, John?
Yeah. Let me show you this.
And then we're going. I know you have to.
I got to balance.
Give you some time.
Yeah. So
and show your website.
Here's your stop, right? So once that candle goes here, you enter here. Yeah. There's your stop, there's your risk, right? And so, even if you got to the low of the day, it's a 1-to-1 risk reward. And then once you get follow through on that, you've done even better. You've done better than 1 to risk. So your risk is controlled, right? And that's where I think a lot of zero DTE traders are missing it, right? And they're not buying the dips and they're not shorting the rips. And so we saw it here. But anyway, I got to get to this real quick. So once we got into last month's range, which is this big line right here, and under the last week's range, things kind of changed, right? And I thought this was great, and because you don't see this every day, right? Normally, like I said, between 11 and 2 o'clock, it's just chop city. But we were like, hold on, right? We're below these. We're back in the monthly range right here. What happens with Elliott wave is that you get these bigger waves with these subwaves. It gets fractal. So an impulsive wave is 5 waves. So there's 5 waves. So then we're like, wait, that's a larger wave 1.
Yeah.
Let's see if we get a wave 2. And if that turns into wave 3, we're having some fun here. And wave 4 can be a triangle, and wave 5 an ending diagonal. So we ended up having a really epic day yesterday. Now watch this. Here's the Fibonacci retrace from the highs of that wave. Look at this. You're going to love this. I'll take off the top one here. Let me get rid of this here. Remove that. Move this. Here from the highs. Look at this. Right to the end of that wave. Boom, another 618 retrace with a very clear A, B, C move to that. So it was downhill. So here's your confirmation candle. It was a big candle, but now you know your risk reward. And if we're talking, we're in the last monthly range and we're losing the weekly lows and we're losing those daily lows below this level. Look at that candle right there. That thing with volume sliced through the monthly highs, right? So we get short here. So here's your risk. top of that area right there. And your reward is, you know, we're talking now, we're looking for a wave. This is a wave 3, right? So we had wave 1. So wave 3 is never the shortest wave. So we're assuming it's going to be at least as big as this one to get some symmetry. So you get this symmetry right here, and then boom, look at that, perfect. And then you got
probably 1 point. It was probably 1.618. So John, what's the best way for people to follow you and get involved with you? You want to show your website?
So yeah, so you can absolutely, yeah. So you can follow us here on Twitter. So we've just let me see if I've got this pulled up here. Can you see my Twitter screen?
Yes, got it.
Yep. So you can follow us here on Twitter. It's Trade with Dr. John, and so and my Twitter ID is Trade with Dr. John at Trade with Dr. John, and you know, so we post a lot of great stuff throughout the day. We've got you know, good ideas here, and then if you kind of dig in and drill a little bit deeper, I've got a link tree right here. So if you click on this, I'm not sure if you can see this. Can you see this?
It's coming up, yeah, with all the things you do.
All the things, and so this guy's just some of the work I've done, and the top one is our chat room. So if you want to do that, you can just click on the top of the link tree right there, and that'll you know, that'll take you to our group if you want to join that. You know, you can see again, here's the Twitter page here. I've got a book. We've got a YouTube page. You can check my trading view videos. We got a morning report and all that fun stuff. So, you know, if you're interested in checking us out, you know, check us out there, or feel free to DM me on Twitter, you know, and, you know, if you mention this show, maybe I can get you in for like a 1 week free trial or something like that, if you want to check out our chat room, you know, that type of thing. So,
all right, well, you made it, John. You're my trading warrior brother.
That's what I'm talking about. Yeah.
And I tell you, I love your energy. You know, you have to email me a list of the vitamins you take and everything. Your demeanor and your positive, it's contagious.
Thanks,
good to be around people that are up.
I hear that. Yeah.
Yeah. So
yeah, we got a good group. We keep it clean. We post a lot of funny pictures of Muppets and stuff like that, and we just try to keep it fun, you know, and just a nice, safe environment for people to talk and to learn, you know, that type of thing. So
Dr. John Sinclair doing what he loves. How about that? And you could really tell when someone loves it. John does. All right, thanks, John. Great meeting you. We'll do it again, bro.
Thanks so much. I really appreciate it. Thanks, guys. See ya.
All right, Dr. John.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.